If any insurance commission is received by the assessee, that comes under income from other sources. Any interest received with respect to IFCI, it is exempted. It is a tax saving scheme, so it is exempted. Mr. B is receiving the rent from Mr. A, then it is taxable under the head of income from house property. Agriculture income, as I said, we have to assume it is a Indian agricultural income, so it is exempted. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session on unit number 3, that is income from other sources, which is there for 6th sem B.B.A students who are studying under University of Mysuru. Dear students, today we will be learning about income from other sources. So we all know that under income tax, we have 5 heads of income. So which are those 5 heads of income? Income from salary, income from house property, income from capital gain, income from business and profession, and income from other sources. So these are all the 5 heads of income what we have under income tax. So in case if you are earning salary, then you are supposed to pay tax to the government under income from salary head, because income from salary have set of rules and regulations. And income from house property, if you are letting out in a property and if you are earning any rent by letting out the property, then you are supposed to pay tax to the government under house property head. And house property head is having a set of rules and regulations, that is different set of rules and regulations compared to income from salary. And income from capital gain, if you are selling any asset in the previous year, then you are supposed to pay tax to the government, and you will be paying the tax under income from capital gain head of income. And income from business and profession, if you are running any business or if you are into profession like as a lawyer, as a chartered accountant, or as a doctor, you are supposed to pay tax to the government under the head of income from business and profession. So mainly these are all the 4 heads of income what we have. Sometimes you will be receiving interest on your deposits with bank, right? You will be receiving interest on your deposits with bank. So at that point of time, interest received from bank will not comes under income from salary or house property or capital gain or business and profession, right? Whatever the salary you are earning, you will be computing your salary under salary head. If you are receiving any rent by letting out property, then you will be computing under house property. And if you are selling any property and you are earning profit, capital gain. If you are running any business or if you are into profession, you will be paying tax under business and profession. But received interest from bank, that will not comes under first 4 heads, right? That will not comes under first 4 heads. So it comes under income from other sources. Yes, income from other sources is also called as residuary clause of income or residuary head of income. Which and all the items, which and all the incomes which does not comes under the first 4 heads, those incomes comes under income from other sources. Okay, and few incomes are chargeable under income from other sources. So which are those incomes which are chargeable under income from other sources? So if we look into that, the first income is income from subletting of house property by a tenant. Okay, subletting of house property. So what tenant will do? Tenant is going to take a house property for rent, like Mr. A. Okay, so what Mr. A will do? Mr. A take a property from Mr. B on rent basis. So the owner of the house property is Mr. B. But what Mr. A will do? He let out this property to Mr. C. Okay. Actual owner of the property is Mr. B. He let out the property to Mr. A, sublet the property to Mr. C. So in that scenario, this kind of incomes comes under income from other sources. If Mr. B is receiving the rent from Mr. A, then it is taxable under the head of income from house property. Okay, because B is the owner and A is the tenant. But A as a tenant is sublet the house to another tenant. At that point of time, it will not comes under house property. it comes under income from other sources. The second one, dividend received. Yes, if any dividend received, whether it is foreign dividend, foreign company dividend or domestic company dividend, it is chargeable under income from other sources. And insurance commissions received by the assessee. Yes, if any insurance commission is received by the assessee, that comes under income from other sources. Next, family pension payments received by the legal heirs of dead employees. So some employee will be working in a company. After his death, what family will receive? The family will receive pension amount, okay, on behalf of the employee. Because he is dead, on behalf of employee, the family will be receiving the pension. So that kind of pensions is taxable under income from other sources. Next, interest on bank deposits and deposits with companies. Yes, if you are receiving any interest from banks, then it is taxable under income from other sources. Next, interest on loans given. Yes, if any interest you are receiving by giving the loan, if you are receiving any interest by giving the loan, it is also chargeable. Remuneration received by members of parliament. Yes, any remuneration received by the members of parliament, it is taxable under the head of income from other sources. Next, rent earned from a vacant plot of land. Rent earned from a vacant plot of land. If any rent received by letting out a plot of land, like not a building, just a land. If any land is let out, then that comes under income from other sources. If any building is let out, then it comes under income from house property. If any empty land is let out, then it comes under income from other sources. Next, agricultural income from agricultural land situated outside India. Yes, agriculture income earned in India, it is exempted. Any agricultural income earned in India, it is exempted, because to entertain or to motivate the agriculturists, the farmers, the government is not collecting the tax from the farmers. In case if the income received, if the agricultural income received by a assessee who is there in India from outside India, then it is taxable, and it is taxable under the head of income from other sources. So agriculture income earned in India, it is exempted as per the income tax rules. Agricultural income earned outside India, it is taxable. Next, interest paid by the government on excess payment of advance tax. Yes, interest paid by the government on excess payment of advance tax. So you are supposed to pay advance tax to the government. At the time of paying advance tax, you paid excess amount. So at the time of returning your excess advance tax, the government will be giving you interest also along with the advance payment amount, the excess advance payment amount. They will be giving you the interest also. So that interest is chargeable under the income tax authority under income from other sources. So these are all the different items what we have under income from other sources, where we will be taxing those incomes under this particular head. So moving on, meaning of bond washing transaction. Yes, we have a concept called bond washing transaction with respect to income from other sources. So avoidance of tax by certain transactions in securities, section 94 of Income Tax Act 1961. Yes, avoidance of tax by certain transactions in securities. Securities is nothing but bonds or shares like that. So to avoid the tax, they do some transactions at the end of the year. Okay, they do some transaction at the end of the year. That is what relating to bond washing transaction. So moving on to know the meaning. A bond washing transaction is a transaction where some securities are sold sometime before the due date of interest and reacquired after the due date is over. Yes. Bond washing transaction is a transaction. It is a kind of transaction where the securities will exchange, before the due date, and it will be returned after the due date of interest. Okay, it will be exchanged with some other party. For example, I am Mr. Arun. Okay, so what I will do is income is like 30 lakhs. So Arun income is 30 lakhs. including securities, he may earn more than 30 lakhs. So to avoid tax, what Arun will do, he transfer his shares or securities to Mr. Kiran. Okay, what he will do, he transfers securities or shares to Mr. Kiran. So before the due date of interest. So before the due date of interest, what I will do, I transfer my shares to Mr. Kiran. So after the due date, after interest paid, when the securities is in the hands of Kiran, what I will do, again I will take back the shares or the securities to my own account. Okay, this is called bond washing transaction. So here, to avoid the tax, what I will do, before the due date, I will transfer to someone else, to my relative or to my friend, like that. After the due date, I will take back the securities to my own account. The practice is generally adopted by person in the higher income group to avoid tax. Yes, to avoid tax, higher income group people, like the people who are earning more than 10 lakhs, 20 lakhs, 30 lakhs, what they'll do, just to avoid the tax, they do this kind of transactions. By transferring the securities to their relatives or friends in the lower income group, just before the due date of payment of interest. Yes, so just to avoid the tax, they do transactions with their relatives or with their friends to avoid the tax, so before the due date of payment of interest. Next, in such case, interest would be taxable in the hands of the transferee, who is the legal owner of the securities. Yes, who is going to be the legal owner, actual owner of the securities? That person is supposed to pay the tax to the government. For example, again I'll give the same example. What I did as Arun, I transferred the securities to Mr. Kiran. After the due date of interest, what I did, again I transferred it from Kiran account to my account. So now, if the authority comes to know, just to avoid the tax, I did this transaction, then I am supposed to pay the tax to the government, not Mr. Kiran. So this kind of transaction, this kind of activity is called bond washing transaction. So moving on, first problem under income from other sources. Okay, it will be very easy. You need not to buy at any format and all. Just if you know which are all the incomes comes under income from other sources, easily you can solve the problem under this head. So the first problem, it goes like this. From the following information, calculate income from other sources of Raman for the year 2022-23. Yes, the first information, income from agriculture land in Sri Lanka. Income from agriculture land in Sri Lanka, rupees 60,000. So whether it is taxable or not? Yes, it is taxable. Next, ground rent from land in Mysuru. Yes, the rent is not received by letting out a property. The rent is received by the rent is received by letting out a ground for rupees 5,000. Yes, it is also taxable. Next, director's fees. Yes, it is not the salary, it is fees. So it comes under income from other sources, taxable. Interest on POSB account. POSB account is nothing but Post Office Savings Bank account. Post Office Savings Bank account. So here we need to understand, and we have some adjustment here with respect to POSB account. So in POSB account, up to rupees 3,500, it is not taxable. Okay, up to rupees 3,500, it is not taxable. In case if the amount crosses more than 3,500, then it is taxable. So now here in this problem we have 3,000 rupees. So it is less than 3,500. Okay, it is not taxable. In the taxable value it comes nil. Next, interest on deposit with IFCI, that is Industrial Finance Corporation of India. So any interest received with respect to IFCI, it is exempted. It is a tax saving scheme, so it is exempted. This will not come. At the place of taxable value, we will be writing nil. Next, dividend from foreign company, yes, taxable. Next, rent from subletting a house for rupees 25,000. Rent payable by Sri Guru for sublet house is 12,000, and other expenses incurred on the sublet house is 1000 rupees. So yes, what Mr. Guru did, Sri Guru, he acquired a house by paying 12,000 rupees. He acquired a house by paying 12,000 rupees and he let out that house for rupees 25,000. Okay, he acquired the house for 12,000 and he sublet the house to some other party for 25,000. So he is supposed to pay 12,000 rupees to the real owner of the property. He is supposed to pay 12,000 rupees to the real owner. Yes, what is the remaining amount in 25,000? The remaining amount is 13,000. So in 13,000, he made some expenditure, that is expenses incurred on the sublet of house is 1,000. He made some other expenditures relating to sublet of house, that is 1,000. Now what is the remaining value? 12,000. So this 12,000 is taxable under the head of income from other sources. This one, 7th point. 8th point, winning from horse race, rupees 21,000. They had given net. Okay, 21,000 net. Net means after tax. Okay, net is nothing but after tax. So here we are calculating income from other sources in order to impose the tax. So what we are supposed to do now? We are supposed to make it as gross value. Whatever the value is given, rupees 21,000, it is the net value. We are supposed to make it gross value. Under income from other sources, winning from horse race. Winning from horse race is taxable at 30% and 30% tax is already collected. So to find out the 100% value, we will do like this. 21,000 divided by 70 into 100. If 21,000 is the value for 70%, then what is the value for 100%? We will get the answer for that. Next, dividend from Indian company. Yes, previously it was exempted. Any dividend received from Indian company, it was exempted, but at present it is taxable under the head of income from other sources. So using these points, we are supposed to find out the value of income from other sources. So particulars, amount, before that computation of income from other sources. So point number 1, income from agriculture land in Sri Lanka. Yes, income from agriculture land in India is exempted, but first one, Sri Lanka, it is taxable because it is not earned within India. So rupees 60,000. Next, ground rent from land in Mysuru. Ground rent from land in Mysuru. So rupees 5,000. Next, director's fees. Third point, director's fees. It is 30,000. Next, interest on POSB account. Yes, it is rupees 3,000, but it is exempted up to 3,500. So 3,000 minus 3,500, value comes to nil. Okay. Next, interest on deposit with IFCI. That is also tax free. Need not to pay tax. So it is a tax free value. Next, dividend from foreign company. Yes, taxable, 15,000. Rent from subletting of house. So the rent received is rupees 25,000 plus 12,000 rupees rent paid to the actual owner plus 1,000 extra additional expenditure. So totally 13,000. If you deduct this 13,000, you will get 12,000. That is rent from subletting of house. Next, winning from horse race. Yes, the given value, the net value is 21,000. That is 70% value because 30% of tax is chargeable on winning from horse race. So 21,000 divided by 70 into 100. This is nothing but if 21,000 is for 70%, what is the value for 100%? You will get the value, that is 30,000. Next, dividend from Indian company. Yes, it is taxable, rupees 12,000. If you total the outer column, whatever the total you will get, the total is 1,64,000. That total is called income from other sources. So this is how we are supposed to solve the problem under income from other sources. I hope you all understood how to solve the problem. So now moving on to the next problem. Problem 2, winning from horse race. Yes, here they are not given whether the given value is net value or gross value. We have to assume that this is gross value. This is gross value. So need not to compute it. Okay, 13,000. Yes, taxable. Next, insurance commission, taxable. Commission on sale of lottery ticket. Yes, taxable. Interest on securities. Yes, taxable. Dividend from Indian company. Yes, taxable. Winning from lottery, taxable. Agriculture income. They are not mentioned whether Indian agriculture income or foreign agriculture income. We have to assume that it is Indian agriculture income, then it is exempted, need not to tax. Next, gift from parents. So gift from parents, it is exempted, need not to collect tax on that. Next, interest from bank deposits. Yes, it is taxable. So moving on to solve the problem. Computation of income from other sources. Next, we have to make 3 columns: particulars, amount, amount. So the first point, winning from horse race. Yes, rupees 13,000. Next, insurance commission, value rupees 14,000. Commission on sale of lottery ticket, rupees 20,000. Interest on securities, rupees 25,000. Next, dividend from Indian company, rupees 20,000. Next, winning from lottery, rupees 5,500. Next, agriculture income. As I said, we have to assume it is a Indian agricultural income, so it is exempted. Next, gift from parents, need not to collect the tax on that, it is tax free, so it is tax free, need not write the value. Next, interest from bank deposits, it is taxable, so we have written the amount 15,000. So if you total the values, if you total all the values, the total you will get is rupees 1,12,500. The total you will get 1,12,500. So that value is called what? Income from other sources. That value is called income from other sources. So I hope you people understood how to solve the problem, and I hope you people understood the meaning and the items which comes under income from other sources, and also you people understood the concept of bond washing transaction. And in this session we also solved 2 problems based on income from other sources. So thank you all. For more videos, keep watching. Until then, thank you.